Hello guys, and welcome back again to the Babylonians Crypto channel. Today we're going to talk about this project called Umami Finance. So this recently caught a lot of attention because they just launched their USDC vault that actually pays out 20%. So this happens a few days ago only, so this just went live very recently. But the cap has already been reached, and right now it's just for whitelisted people. But today we're going to look at this whole project, what is it all about, as well as the bullish case study for it. So to start off, they have these two revenue source. So one, they have their own vault strategies, and right now it's only this USDC. And this USDC vault actually uses GMX, GLP, and TracerDAO protocol to actually get this 20%. So the idea is they just capture the yields from GLP, and then they will hedge against the Bitcoin, Ethereum exposure that is inside GLP. So if you have not watched GMX, GLP and how all this works, I have already done a video which I will link at the end of this video. And TracerDAO later I will just go through briefly. So this is the idea of how it works. They just want to capture the yields from GLP and then hedge against market volatility. So in this way, you get a delta neutral situation where you just earn fees regardless of market move up or down. And also additionally, the TCR shorts, they actually also stake it, and they will earn this TCR emissions, and they will convert to USDC. And then the GLP yields, they also recompound and vest the ESGMX to earn more yields. But this is just a small portion of the 20%. The main bulk still comes from GLP. So all this revenue from the vault comes here, total revenue. And then their revenue model for this is they will earn a 0.5% on deposits, 1.5% on TVL, and then 15% on the yield. So example, let's say if it's 10 million in this USDC vault, so the revenue will be 0.5% times this, 10 million, 50,000. And then this is for AUM, 150,000. And this is charging a 15% on the yield that is earned, which is 20% times the TVL times 15%. So this is the revenue. So the other portion comes from the treasury. So this treasury is just made out of GMX, GLP, and some Uniswap V3 LPs. So the total revenue from these two will come here, and 50% of it goes to those who actually buy this UMAMI and stake them. And then the other 50% goes back to the treasury. And also what is attractive about this is that it offers a direct share of protocol revenue in ETH. So actually, when you stake your tokens with them, you're actually earning your yields in ETH. And also you have the option to auto compound to stack your UMAMI so that you can earn more ETH dividends. So again, you can see here, UMAMI used half of the monthly yield from its POL to pay out ETH to UMAMI stakers. So this is just a brief overview of the whole revenue model. And now we will look at TracerDAO. So TracerDAO, I haven't done a video of it, but this is just a brief introduction of it. So the key idea here is you can go leverage long or short, 3x or 10x without liquidations. And how do you do it? They just use these oracles to mimic. So it's sort of like synthetic stocks. So each pool has the longs and the shorts, okay? So if the longs win, then the shorts will pay longs their money. If shorts win, then the longs will pay the shorts with their money. So everybody who wants to enter a position, they will just put USDC into collateral. So let's say if ETH price goes up 5%, then those shorts who deposit USDC will go to the long and vice versa. So you're just betting against the opposite person, that's all. So this tracer pool will actually rebalance this USDC proportion every 8 hours between the long and short. Then the next problem is what happens if it becomes imbalanced. So let's say there are 1.5 million shorts, right? But there are only 500,000 longs. So let's say if ETH price really goes down, continue to goes down, and all the shorts want to take profits, so there won't be enough USDC from the longs to pay everybody, right? Because there's 1.5 million here and there's 500,000 here. So Tracer solves this by using a skew mechanism. So in this above situation, it will incentivize more long and this incentivize more shorts, sort of like funding rate. So instead of longs winning 3x for 3x leverage, now they can win 3.5x or 4x. And instead of shorts winning 3x, now they only win less. So in this way, more people will be incentivized to go long, and then the liabilities to pay out the shorts also reduce. So this makes it more imbalanced, and you can see an example of the skew for 3x Ethereum, and you can see that the skew doesn't always stays at 1. It depends on the proportion of people who go long and go short. So here are some strategies that you can take. So example, right now there are more shorts than long, so it means they have to incentivize long, right? So the first is this delta minimize skew farming. That means you deposit 100,000 3x long ETH, and then you deposit 100,000 at GMX for 3x short ETH. So if ETH price rise, I will earn more because TracerDAO actually pays me more. So let's say I will earn 3.5x. They want to balance the skew, so they will incentivize the longs more. And if ETH price falls, I still earn from GMX because the loss is lower. And second is if you're bullish on ETH, but many people when go short, you can just go long on TracerDAO because they pay more than 3x as compared on like other traditional platforms. And finally, how does this actually relate to UMAMI? So UMAMI actually takes this USDC vault. So people who deposit their USDC into this vault, they actually, one part of it is used to buy GLP. The other part is used to buy shorts on Tracer. So to make it delta neutral, to hedge against the exposure on GLP. So the problem with this is that there would be a lot of money that is flowing into TracerDAO shorts. So shorts will keep piling up as USDC vault increase. And this would make the skew imbalanced. So short returns would reduce and long returns would increase if there's imbalanced skew towards the short. So this is actually happening right now, and they are actually encouraging people to go long for their strategy to work, because if not, then they can't hedge properly. So this opportunity is called skew farming. So UMAMI opened this opportunity for the bulls to go long so that they can earn a typical 3x. So you can see, for example, this is ETH USD for 3x leverage. You can see that if you go short, you only earn 2.39 instead of 3x. But if you go long, you are actually earning more than 3x. You're earning 3.7x. And the reason for this is because there's a lot of shorts on TracerDAO that is coming from UMAMI's USDC vault. And you can also see this post beginning in about 8 hours. So this was just posted a few days ago. There's going to be a strong bias towards a favorable skew in both the 3 long ETH and BTC pools. So if you are bullish on ETH and Bitcoin, this is actually a good place to go long because you will earn more than 3x as described over here. So next is the tokenomics part. So UMAMI has a max supply of only 1 million. There will be 0 emissions, and 125,000 is already burned. So they are in some defunct staking contracts, and the remaining max supply is actually less than 1 million. It's actually 875,000. And out of 875,000, 650,000 is already in circulating supply. So actually there isn't a lot of tokens going around anymore because most of it is already out, and the supply is really very low. And here are just some stats. About 50% of them is already staked on UMAMI. And then you also have the option to auto compound. So 50% of those who stake also are auto compounding it. And finally, there are only about 1,050 addresses holding UMAMI. So this project is still pretty much in a very early phase. So this is the base scenario that I have done. So the assumptions are it will hit 1 billion TVL by 1 year. And Anchor took about 4 months to reach 1 billion. So if this USDC vault 20% is really sustainable, I wouldn't be surprised if it hit 1 billion soon. And also they have this Bitcoin vault, ETH vault that is launching soon in September. And again, you can see that right now only USDC vault is open, but they will come out with more vaults in the few months to come. So this is coming in September, which is just 1-2 months time. And then the third assumption is that a lot of people will auto compound. So here is how this table works. So right now there's about 3 million USDC in the USDC vault, and right now it's capped. So even if you want to join, you can't join. Only for whitelisted people, but they will open out to the public in 4 to 6 weeks. And this is the yields earned from the vault strategy. So this is just 20% times the vault, and then this is the treasury. So right now they have about 5.8 million in the treasury, and this is the revenue calculation. So they'll earn 0.5% on the deposits, and then 1.5% on the TVL, and then the other 15% is based on the yields that are earned from the vault. So this is the total fees collected from USDC vault, and this is the total fees collected from the treasury. So I'll just assume that this treasury is earning 20% because for June, for May, historically, their APR is around 20% to 25% because most of it is on GLP also. So this is the monthly cash flow for every month, and 50% of them goes to sticker. So the thing about stickers is that this deposit doesn't go to stickers. Right now, it goes to the treasury. So you can see over here, deposit fees for now go to treasury. We want a higher TVL because we want to see yield on treasury assets cover OPEX. But you can see over this chart here that 50% of what they earn from the treasury also goes back to UMAMI sticker. So indirectly, it's also beneficial for those who stake. So these are just some assumptions, and this is the amount of cash flow that goes to sticker. We just minus the deposit fees and then divide by 50%. So if we assume that there are 700,000 stake, so these subsequent months, then this is how much cash flow they will receive every month. And this is the market buyback pressure. So this is based on those who choose to auto compound their tokens. So from here, you can see that this is the annualized dividend. So this is based on the forward yield estimation. And the idea here is that since there's a cash flow, there should be a floor price and a ceiling for how much people are willing to pay for. And this is the range of yields. So at $34, you are actually earning 4% yield for the next 12 months. And at $4, you are actually earning 35%. So the theory is that it is very, very unlikely to go below $4 because if people see that you can earn 40%, 50% yields on Ethereum, definitely people would snatch it up. And the average price range should be between 5% to 20%. So this is sort of like the average price that people are willing to pay a fair price for. And these are all the assumptions. So they are planning to hit 100 million TVL by end of this year. And right now it's only 3 million. And this is just the USDC vault. So once they raise the cap and they open BTC vault, if what, this is very likely to happen. So when it is at 100 million TVL, the cash flow is almost about 1 million. And these are just some rough estimates. So at this point, you can see what is the range of price at different yields. So example, if it's at 15%, it will be around $45. So this is just some rough assumptions, but I wouldn't take it too seriously. But it does give a rough idea of what is cheap and what is expensive. So this is just based on the forward yield estimation. Another method is to calculate how much cash flow you are expected to collect for the next 12 months. So this is the total fees accrued to stakers, total monthly cash flow minus all the deposits, because all the deposits goes to treasury. And then you can see that cash flow per UMAMI stake is about $14 based on this. And also the treasury per NAV is just the treasury at the end of the year divided by the number of tokens you have. So it's around $26, and this is the market buyback pressure. So then the question is, if this token is paying around $14 annualized cash flow to you, how much are you willing to pay? So this can be a question to check what is the price range that you are comfortable with. And this is the conservative assumption. So this is like the worst case scenario, like this Bitcoin ETH vault got delayed and this 100M target got delayed and they only reached 500 million instead of 1 billion. So again, these are just some figures I wouldn't go through because I think get a rough idea here. Now I just talk about the bullish situation as well as the risk. So the good news is they have already formed a company, formed some kind of legal structure, and the reason for them doing this is to actually bring in institution money and hedge funds from the TradeFi world. And they are already in talks with all these big names, big funds, whales, and they have 800 plus contact in the database. So the bullish catalyst is when a few big names join their vaults, put in money, 10 million, 50 million, and all these news media start coming out. It will drive a lot of attention and hype. And once it reaches 10 billion, this would definitely boost the credibility of this protocol. And they launch many more vault strategies other than USDC, Bitcoin, Ethereum. And also they decide that a part of deposit fees goes back to stakers instead of treasury. more revenue source, more people stake. And also this USDC GLP, so this is like a receipt. So if you put your USDC into the vault, you actually get back USDC GLP. And this is actually a fungible token that you can use for collateral, and that adds more utility to it. And also Arbitrum ecosystem is booming, and they are launching their Nitro Boost soon, and a lot of ecosystem upgrades coming. And let's say if there are more dApps, all these kind of things, definitely UMAMI would also benefit as a whole. And if GMX Tracer also make bullish developments, this will also benefit them. And the best part is there's no VCs, it's all community owned. And this is just some of the risks. So in my opinion, the biggest risk is that this is just derivatives that is built upon other dApps. So if you think about dApps that built on Terra, built on Anchor, if Anchor collapse, their whole project would fail. So in the same way, if GMX, GLP, TracerDAO screws up, there's also a high chance that this project will be affected in a big way. And then the second risk is that the scalability factor is limited, because they always need to balance out the pace of GMX, GLP, and Tracer and UMAMI. So the pace of TVL growth and the pace of GLP must be the same. If there is like an outpace of growth, then there's a possible situation that GLP use might be diluted. So this would also affect their vault strategy, and it might lose out the appeal and hype. And the same way for TracerDAO, let's say if TVL growth grow very fast, and this would totally skew off the shorts or long, you reduce the leverage, and this market neutral strategy doesn't work anymore. It doesn't hedge properly anymore. And the other smaller risk is that we only hedge against exposure, price exposure, but not against the traders. So if traders on GMX win, you actually lose. But historically, traders tend to lose. So you only hedge against price movement. And then next is also GLP also has Unilink, but it doesn't hedge against these two. So, but I think this is immaterial. And TracerDAO balance every 8 hours, so it will not be delta neutral. Finally, the rebalancing model is not heavily tested in times of extreme volatility or very high TVL complexities, as seen in Anchor. So this is still untested, and they have a very low circulating supply, low float. So there's a very high slippage, high volatility, especially at the end of the month when the market buyback happens and unlock happens. So this is very hard for traders to buy or sell UMAMI tokens efficiently. So in summary, if UMAMI is successful, definitely GMX and Tracer will blow up, because all of the money that they receive is going to go into GMX, GLP, and Tracer. And why GMX is so successful is because people can actually earn native yields. So this is the core idea of UMAMI. They want to produce real yields, real sustainable organic yields. And all this DeFi Ponzi emission, it will work in the short term, but it doesn't work in the long term. So they are really here for the long term game, to capture all these institutions and high net worth people, because usually this category people, they look for delta neutral strategies. They don't want all this crypto movement, but they are very interested in capturing the yields as compared to TradeFi. So in a way, UMAMI is like a combination of GMX and Terra. Because Terra, why is it so successful? Because of Anchor 20%. Anchor 20%, it reached like 10 billion TVL easily, and that burns a lot of Luna. So now they are actually launching their vault also 20%. But how sustainable it will last, we still don't know yet. But even if it's 10%, 15%, it is still very, very attractive. And they're actually paying out all these yields natively in ETH. So overall, I think this is a very interesting project to look at. I think it has strong potential. But this is not financial advice. I personally own some. And if you look at the FDV right now I think the price is around $27 or $28. And the whole FDV is like less than 20 million. So it is really, really undervalued in my opinion. And I think there's a lot of room to grow when they launch these vaults, and when they start removing the cap limits and reach a higher TVL. So how to buy is actually quite simple. You just bridge your ETH to Arbitrum, and you just buy directly on Uniswap on the Arbitrum chain. Everything is very cheap, so you don't have to worry. And another way is you can place a limit order on Chromatica Finance, but you just buy some tokens, but it's very cheap. It's like 4-5 cents, so don't worry about that. And number 4 is you can set limit order on Uniswap V3 range, but this is more technical, so wouldn't advise if you are just a beginner. And finally, once you buy your UMAMI, just go over to their platform, stake them, and if you are long-term holder, just compound them and collect all these yields. So I hope this video gives a good introduction of UMAMI Finance and everything. So if you want to see more of such videos like that, remember to hit the likes, thumbs up, subscribe. Thank you, and I'll see you in the next one.